All right, we are live. What is good, everybody? I hope you had a great week or weekend, shall I say. And we are going to divulge into the markets here soon. All right. Man, it is going to be a good week, to say the least. I can feel it. All right. Let's get into it. So let's start off with gold because this is what I will be mostly trading this week and be focused on this week. Time frame here. Now on the weekly time frame, we can see that gold previously created a high up here which broke the two previous highs. If we get this here at 2080 levels, like 2081 when we refine down to the smaller time frame. It broke these two previous highs. Then after breaking those highs, we had a corrective structure form. So first we have our impulsive move up on the weekly time frame to create the 2080 highs. And we know that price has been trending bullish, creating higher highs and higher lows. If we zoom out here to the monthly time frame, you can see that you can see new highs. Now, I will say that if and when we do break this 2081 levels, gold will have created an all-time high. So we have our impulsive move up for gold. Yeah. Then we have what is a corrective structure. So this was roughly 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 18, 19, 20, 21, 22, 23, 24, 25, 26 weeks. And I could have just pulled up a tool to do that, but it's whatever. 26 weeks. So the past 20 or so weeks have been wiped out by the past 2 weeks and the volume that we have seen the past 2 weeks. Now, this move started on NFP Friday. So the first Friday of this month, we seen price had came down to this key level of demand here, and then we got a bullish daily closure. This was on that NFP Friday. So bar by bar replay, let's go ahead and go back, flashback to this Friday. Where is the tool at? Oh, there it is. So once price had closed bullish at this key level of demand, we knew we had a move that we could correct. We capitalized on these moves to this 1884 levels. That's where we had closed our position. The previous week, after we seen this continue to push, the weekly had closed bullish, extremely bullish last Friday, or not this previous Friday, but the Friday before last. We closed extremely bullish here, and you can see it replicated by the weekly and how strong this weekly candle reacted off of this key level of demand here. And then you seen the previous week continued in that bullish trend. So what can we anticipate? This volume to continue to push for new highs. We already know the trend is bullish, so we're just looking to find a spot to continue riding this to the upside and the overall take profit. I will have resistance at I believe it was 2050 levels, so we dial down to the smaller time frame. We can see the 2050 resistance here, but overall anticipating gold to create new highs. Now this may take 2 or 3 weeks for gold, depending. It depends on how much volume we have. If volume continues, we could see gold this week or potentially next week break for those 2081 highs. And so what I would expect to happen, what are we going to capitalize on? I'm going to wait for gold to form some type of corrective structure. Now, when market opens, we'll see what happens when market opens. Because last week when the market opened, or not last week, the week before last, we was looking to buy after that first bullish daily candle that happened for NFP. The market immediately bought up as soon as market opened, and there was just too much volume. So we'll have to see if we get a corrective structure now here for gold. We'll look to take another buy for another push up, and then I'll look to say, like I said, targeting that potentially 2050 levels here at resistance. Let's see, but ultimately to the 2081. And so what I'll do is I'll scale into this just how we've been doing the past couple weeks, is just continue to scale in positions and hold to this overall take profit, because it's based on a how you say, like monthly or weekly structure, and gold has a quite an upside to go. And then following all the news that we've had with the war, this is where people invest their money. When everything goes to trash, everybody puts their money in gold, which is why we tend to see it rise in times of economic stress. So this is what I'm looking for, and this will be, like I said, the main move that we focus on this week. I'm looking for basically a bottom wick. So on the smaller time frame, it would be a corrective structure, and then a steeper a continued push up. So we zoom in here. Something similar to this for the weekly to continue pushing bullish. And yeah, so that's what I'm anticipating this current weekly to look like. We don't have too much news this week. I know Powell speaking on Wednesday, so the week. And I think it's just likely structurally based that gold continues pushing in the direction of the structure with all of this volume. All of these past couple of weeks have gotten wiped out by these previous 2 weeks. It's what is going to stop gold when we know we've been creating higher highs and higher lows here. A high, a low, a new high that broke previous structures, key structure there on the weekly time frame, then a corrective structure, impulsive move back up. It's likely that we just go through and we break through new highs. And so we've capitalized on gold within, because it's more important to me that you guys understand why and how. So it was all structural based. When gold is creating higher highs and higher lows, we like to scale into positions. So the first position that we took on gold was here. We couldn't get this first impulsive move up 2 weeks ago on Monday because or Sunday, shall I say, because see the first hour candle bought up immensely. So then when price corrected, we created a new high. This is where we scaled into our entries. So price had pushed up. We have an impulsive move up. We got ourselves a corrective structure to form. And we took entries after these highs, and we dial it down to the smaller time frame here. So price pushed up, impulsive move up, corrective structure down. We want to get in when we know this corrective structure is done. We knew this corrective structure was over because if you dial down to this smaller time frame here, you can see that it broke for new highs, clearing these highs here at this level. It cleared these highs here at this level. So we knew that price was now shifting from being in this bearish corrective structure to now a bullish market structure. So when price pushed up, took entries in this level. I believe it was 59. I can't tell you the exact entry. I know it was within this area. With the stops below this low, and then we were targeting that 1884 resistance that we had on the 4-hour time frame. Let's see here. So at this 1884. And you can see price pushed to that. We had CPI. So we hit our take profit, then CPI hit, price corrected throughout the rest of that day, and then that next day, so it was a Thursday, price continued pushing immensely for gold. I didn't catch this move, or let me see, where are we at in the markets? I didn't catch this first initial move, but we were able to scale in on the smaller time frame this week, within these levels here. So price had created a high. I got in at 1951. So after this high had created, we formed this low. You got to dial down to the smaller time frame to see the structure. We had a low created, a lower high, price was going down still. Then this move up right here, which broke these highs. And this happened in our session time. And I'm going to show you how the 4-hour candle closed, because that was a big portion of the reason why. So it happened, one, in our session. We seen the change of character happen, and the 4-hour had closed bullish. It was the first 4-hour candle of the London session. But we went ahead. I took my entry within 1951. I can't spit you the exact entry. Stops below here. With a target of 1987. Stops was definitely not below there. Stops was below here. Stops was. And it was at 1987. So yeah. We got in at this level, and why we targeted is high. So it was this high right here on the 4-hour time frame. Here. Zone. So you can see I was just anticipating price to create a new high, and I actually wanted to open my take profit. In here, when price ran, it ran a 1 to 11. Don't get me wrong, it's a good trade. It ran like a 1 to 11 risk to reward, but just, you know, seeing all the volume that happened after it, this is why I wanted to hold and like continue to scale into this position, because I believe, like I said, 2081 is the next target for gold. So what I'll just do this week, like we do every week, is we'll just wait for our corrective structure, and I'll be sending out this setup throughout the week to update everybody. We wait for our corrective structure, and if we don't get the corrective structure, I'm expecting volume to be slow on Monday. It generally is, but if we don't get it on Monday, then Tuesday for sure we'll have to be looking for a move, especially if gold breaks this high that it had created at, what is this level here, 1997. If it breaks this high, definitely a corrective structure, and we'll just scale in and continue to scale in for every new high and new low. One trade a day at 1% risk. So up to 5 trades in a week, one trade a day at 1%. And I'm just going to scale in until this 2081 level gets hit. And that's pretty much my whole plan for this week. I really don't like, I look at these other charts, and I believe EU could tap into this level. I still believe EU is bearish. So I don't think EU is bullish yet. We did have this creation of a new high, but unless this high right here is broken for EU, then this structure is still bearish to me, and I think we can get a push up and then it to push down, clearing all of these lows here and potentially breaking for a new low. That is if we don't see this this 106 1.06356 level get broken. If it does create a new high, then this structure is in fact bullish, and then we can go ahead and look for buys. But what I see is an impulsive move down and a corrective structure back up. It's taking way more volume, or way more candles, shall I say, to correct this move that we had down. It's likely when price comes to this level of supply, you start to see a potential bearish move from there to clear out all of these lows. And likewise, the DXY has just been getting increasingly stronger. So if we see the dollar come to, let's say, this level here, I would want to see how it reacts. And even if it does come to this level, it may not even come down this low, and we could see a push up and then a break. So I would have to watch the DXY. Like I said, I'm not really looking to trade any other pairs. I think it's just so much better to just find a pair that's moving and has great price action and great structure, and just focus on taking trades on that pair and scaling in. That has been the most profitable thing for me. So many people, they get a good trade on one chart, and then they go to, and myself included, this was definitely what I used to do. I get a good trade on one chart and then instantly start looking at other charts to trade instead of scaling into the one that's already a winner. So I would take one winner and let's say two losers when I could have just scaled into my winner, and it would have made me more profit. That's how I see it. And so for the past 2 weeks, and for anybody who knows how I trade moves, so waves in the market. So for the 2 weeks before, we were trading gold, we were trading EURUSD to the downside. EURUSD, within these moves, every lower low and lower high, we were capitalizing on this wave to the downside. For GBP USD, the same thing. We took GBP USD earlier up in these levels before we had moved to EURUSD, just trading the wave to the downside. Once price created this new high here, I looked away from it because gold had just been moving so beautifully that it's a better, how do I say it? It's a higher probability chance of success. So I just look to capitalize, and I got some goals for this week. So I'm going to tell you guys my goals. I'm trying to take, my goal is, by just trading gold, I'm looking to take a 4K account to 10K. I really want to take it to 50K. So that might just be what it is. So 4K to 50K, 3K to 10. I have a 200K funded that I just need like 0.75% to get the funded. So I'm going to take that trade. That'll be the first trade I take this week, so I can go ahead and get that account. And I want to make, if the markets present itself, like 3 to 4 or 5% this week, just on the funded account after passing it, because like I said, I only need like a 0.75 to pass it. So that's that. Then I have a 200 funded that I'm looking to. I didn't even trade the gold move on it. Complete transparency, I didn't trade on that 200K funded account. I did take it on 3, 4, 5 other accounts, but I didn't take it on one. So, which I should have, but it's okay. So those are just a couple of the goals that I have for this week, and I'm looking to do that all on gold here. Now, I'm not looking to sell gold. I just don't think it's a smart decision, just based off of how much volume we had in the previous week. If we're looking at probabilities here, we had 2 weeks that wiped out the past 20 weeks. They closed with extremely bullish. Price is bullish on the larger time frame. We know that it just created a new high. We got a corrective structure. For those of you who use like the fibs, I'm sure this is like a what? It's like a 50 retracement. But it came down to a key level of supply. This is why I don't use the fibs. But it came down to a key level of supply. Structure is just much cleaner. It's just easier to see exactly where price will react off of. I think the fibs is good, especially when starting out, so that you can see these levels, but it gives you like a general area. It's not as specific as finding the level of demand or the level of supply where price can react off of, continuing in the direction of the trend. So just based off of how price has been bullish. It wiped out all these previous weeks. We had an impulsive move, corrective structure, another impulsive move. It's likely that price is ready to go create a new high, and that this weekly would close bullish. So if this weekly would close bullish, yeah, if you trade the smaller time frame, you could maybe scout to the downside, but it would just be better to scout to the upside because we have more room that price could go up, or that it's likely that price will go up. So that is my take on that. You guys know, for those of you who've been tuning into these live sessions, that I've been waiting for NZD USD to break these lows for the past 2 weeks. Now, we tried trading NZD USD. I got stopped out by like a hair before it had went to my take profit like a couple weeks ago. Only traded that one. Since then, I hadn't really looked at it too much, but I had been waiting for NZD USD to break these lows here, and it finally broke these lows. Now if we can see, the previous daily closed bearish, but if we get some form of corrective structure here on the larger time frame for NZD USD, and then a good strong reaction based off the daily time frame, then I would look to actually start trading NZD USD to the downside. And if we were looking for targets, our target would be, we have resistance here, so within this level is where we see some resistance, and we'll have to dial down to the smaller time frame to refine it. But I think this would be a good first target, and then overall target, if you're looking at the larger time frame for price to break these lows, it's likely we see some type of reaction within this level of demand. So whether it's a corrective structure or something, that's why I don't generally target the lows on the larger time frame. But for those of you who do trade the larger time frame, it's likely that in the grand scheme of things that we continue to break these lows. As you can see on the weekly time frame, price has been creating lower lows and lower highs, but it looks like we got, wait, let's zoom out. Oh, okay. Yeah, so I won't look to touch this until we get some form of corrective structure. And honestly, it would be cleaner to just trade something like EUR USD or potentially AUD USD. What trade is this? I haven't traded AUD USD, but I don't know what this is. So same thing with AUD USD, and I actually like AUD USD better. To clear these lows here, it's likely that we do get an impulsive move for AUD USD to grab the liquidity that we have stored below this low here and this low here. And if it breaks these lows, we know that that indicates that price is now on a bearish trend, which it has been, creating lower lows and lower highs. But what we're seeing now is price squeezing at this 0.6290 levels. So what I will say about when price squeezes, we generally get, when we get the break, an impulsive move. And this is how you can look at it. We have all of this volume. Price is getting tighter and tighter. It's like a rubber band. So if you pull a rubber band, it gets tighter and tighter and tighter until eventually it breaks. And in this case, the break would have more volume. And this is likely what we started to see for gold, is when, well, not specifically gold. Let's look at NZD USD. No, none of these are actually the structure that I'm thinking of. But generally, even just with the law of triangles, that's just how triangles work. So if you see price is pushing like this here, when you get a break, whether it be the upside or to the downside, and this is obviously depending on what the larger time frame trend is. So let's say the larger time frame trend, like how it's been for NZD USD, has been down. When you get this break to the downside, that's where we see a lot of volume come into the markets. And then especially a corrective structure and a strong reaction off of that same level is where we would see these lows get taken out, and that would be essentially my best move right there. But on a smaller time frame, catching this break to the downside, because with so much volume, it doesn't have to correct all of it. A lot of times when we get a lot of volume in the markets, we just see a small corrective structure, as similar to what we've been seeing on gold. Gold hasn't formed a full corrective structure if you look at it here on the 4-hour time frame. This volume eventually one day will get corrected, and it'll likely be a slow move to the downside, but we haven't seen any real corrective structure form for gold in the past 2 weeks. We have maybe one. This is not even a 50% correction. And so gold has just been continuing bullish, and that's why we'll look to continue to scale in, and also why I don't believe it's smart to try to sell any trades. Yeah, when the market's open, I'll be looking for gold buys. Not immediately off the market open, but definitely because this is what happened. We had the daily close bullish, and it pushed above and created a new high. So it's likely that we see the next daily form a bottom wick and fill this bullish push to the upside. If not the first day, because Monday is generally slower, we could even see it off of it depends on how much volume we have on the open, because the last week's open had a tremendous amount of volume within just the start of the open, but we could see this wick get filled and price to create a new high, continuing to look to target these 2080 levels. So that's what I would say to be mindful of. We already have 1 hour candle close bullish after we had a high, a corrective structure. So we definitely could see this go. I won't be looking to trade outside of my session. It's just not smart. The best entries that I get are typically in session, or specifically at the beginning of the session. So I won't be looking to trade until Monday morning. And then depending on how much volume we get Monday, it's likely we still see Monday close bullish, but it might not be a lot of volume. We'll go ahead and capitalize on Tuesday based on the structure. So that's pretty much all I'm looking for this week. I really just wanted to highlight gold and get on here to highlight gold, because this is the structure that I'm going to trade. I don't like to send out setups on things that I'm not trading. I also don't like to bring light to it if I'm not actively trading, though it may help some in just their own analysis. I think it's best for me and for everybody else to just focus on the ones that I'm actually looking to capitalize on, because that's just what I found to be the best. So I appreciate you guys who tapped in to soak up this knowledge. I know I kind of rambled on here a lot, but this is really important to me, and I think trading is, like I say all the time, life-changing. And this move right here, we're looking to crush some goals on, specifically this move. So appreciate you guys tapping in, and let's have a great week.